The oil market recently saw something that it had never seen before. For the first time in history, the prices slid to less than zero on 20th of April. Because of a supply glut in the wake of the global coronavirus crisis and a demand slump, US crude oil futures collapsed to less than minus $38 per barrel. Desperate traders were paying to get rid of oil. So much so that President Donald Trump had to intervene and announce that the US would add 75 million barrels to its strategic petroleum reserves. The Organization of the Petroleum Exporting Countries also stepped in along with Russia and other allies and announced a cut in production. The shock of the negative oil prices was felt across the world, with stock markets globally reacting negatively to the development. For perspective, it should be noted that crude oil prices hovered around $100 a barrel in international markets between 2010 and 2014, even going as high up as $128 in 2012. Even at the start of this year, they were close to $67 per barrel. So what has happened lately to cause such a massive drop? How bad is the global outlook? And what does all this mean for India, which is a major importer of petroleum products? Let's take a deep dive with AKB to understand. Who controls oil prices and what has led to this precipitous fall in global rates?
No single agency controls oil prices. Global crude oil prices are largely determined by market forces driven by expectations of demand and supply. There are two major indices that determine the movements in the crude oil prices globally. One is the West Texas Intermediate Index, that's WTI. Other is the Brent Crude Index. What we saw on 17th of April, this precipitous fall in the price of crude oil happened with regard to the WTI, which is the West Texas Intermediate Index. There was a sudden surge in supply because of lower demand, and there was a feeling in the market, and the hub of WTI is in Oklahoma. There was this feeling that producers were willing to pay buyers for taking delivery of oil. Remember, this price drop to minus 38 a barrel happened with regard to the May futures. So in my view, this was actually a kind of a technical aberration. This was the last day of the expiry date for that May futures, and it was a market sentiment that drove that price. The June futures for WTI is actually $12 a barrel. So what happened for May futures was a kind of a blip. Yes, crude oil prices are coming down. As a matter of fact, even Brent crude oil prices the next day, that is on 18th of April, and then again on 19th of April, they have been falling. They're now rolling at around $20 per barrel. So there is an overall sense that the crude oil prices will remain at such low levels, mainly because there is oversupply, mainly because the demand for oil has come down in the wake of the coronavirus outbreak and lockdowns in many countries, which has meant demand for oil has come down. So expect the oil prices to remain in such low levels till such time demand picks up and the coronavirus outbreak has been contained.
What role does OPEC play in this?
Well, OPEC is a group of 13 oil producing countries. They are all in the export market and they account for 80% of global oil supplies. What they do is that they don't want the oil prices to come down to low levels because that means their income will be affected. So this time also they got into a huddle and they decided to cut production so that there is no oversupply of oil in the market. So they agreed to cut in the global oil output by around 10 billion barrels per day, which is roughly around 10% of the global output. But the sense is that a cut in global oil output by just 10% will not make much of a difference. It may help prevent a further fall in crude oil prices, but it certainly will not be able to lift those prices to a level that the OPEC member countries will like. So even after the OPEC production cut, prices have remained at such moderately low level of $20 a barrel that itself is a sign that OPEC's production cut has not had much of an impact on global oil prices.
What will be the future direction for oil prices now?
Well, it looks like that the consumption of global crude oil output will remain very depressed. It is true that the stocks, the reserves level are adequate, and also the storage capacity in the US is quite high. The utilization of the storage capacity is just 30 to 35%. So oil companies can produce more oil and keep that oil in the tanks instead of flooding the markets. So it is possible that oil will be produced but not pushed into the markets. But the broad sense is that with economic activity coming to kind of a standstill, till demand picks up, oil prices will remain at current low levels.
So what does it all mean for India and its import bill?
Well, normally the conventional wisdom is that when crude oil prices come down, the Indian economy gains, because India is hugely dependent on crude oil imports. Almost 83% of its total crude oil requirements are met through imports. So in the normal course of things, if crude oil prices had come down and India's economic activities were in full stream, Indian economy would have benefited. But what has happened now is that it is the coronavirus outbreak which led to a fall in global crude oil prices, and it is also a fact that because of the demand coming down and economic activities coming down, the Indian economy cannot derive the same benefits that it would have done if the crude oil prices had fallen in an otherwise normal situation. India's consumption of crude oil and petroleum products has actually come down quite significantly, in a sense that if you look at that 2019-20 financial year data, the increase in consumption is less than 1%, just at around 213 million tons of petroleum products. It is just 0.22% increase over 2018-19. Even 2018-19, the increase was only around 3.5% or so. So India has seen a steady deceleration in petroleum product consumption, which itself is a sign that the Indian economy is not doing too well. But take it in the petroleum sector. Look at it from the petroleum sector's perspective. What you see is that India imports a lot of crude oil. The total petroleum product import bill is around $129 billion. That was last year, and that fell by around 8%. But remember that India also exports a lot of petroleum products. It exports about $42 billion of petroleum products last year. That also saw an 8% decline. The benefit of the fall in the crude oil imports would be contained to some extent, because India also exports petroleum products to the tune of around $42 billion. So the benefits will be limited, but there will be some benefit on the current account, on the trade account.
What could be the potential challenges?
We need to worry about the fall in crude oil prices at this time for a different reason, which is that the government's finances are critically dependent on economic activity, and crude oil and petroleum products provide a good chunk of India's, the government, the centre's revenues, in a sense that almost 2.46 trillion rupees was the total revenue from the oil products for the central government, and around another 2 lakh crore or 2 trillion rupees was the state's revenues from the oil products. So if you see that the consumption comes down, and the April data tells us that the first half of April the consumption has dropped by around 60%, naturally you will realize that the government's finances will come under strain, because they will not get the same amount of revenues which they had budgeted for. So that is one setback. There are two other setbacks. One, India is critically dependent on remittances from particularly West Asian countries. There's almost $75 billion or 72 or 73 billion dollars of remittances come every year. Now, the latest estimates say that remittances may drop by 20%. Now, if those remittances drop by around 20%, certainly India's overall earnings on the external account will take a hit, and this is directly linked to crude oil price coming down and the coronavirus outbreak. So that will be the second impact. And the third impact would be that India wants to sell its major refinery company, which is the BPCL, and everything was going smoothly, but this depressed oil prices will certainly depress the valuation of BPCL, which will mean the government will get less revenue by selling its stake in BPCL. So on the whole, the oil prices drop in the wake of coronavirus outbreak has had a destabilizing and negative effect on the Indian government's finances, and also to some extent the economy. The challenges would be how the government uses this situation to bolster its finances. It is possible that the government's revenues can be stepped up from the oil sector, because the Indian basket price for crude oil has come down to around $33 a barrel from over $50 a barrel. In February it came down to 33, and my reading is in April it will come down further. Now, these are windfall gains for the oil companies. The government in March had raised the special excise duty and a little bit of cess on petrol and diesel to garner some of the windfall gains which the oil companies would have made for the exchequer. Recently, the government has already raised the government has equipped itself to increase the excise duty further by 8 rupees, both on petrol and diesel per litre, and therefore the government can use that power to increase the excise duty without having an impact on the retail selling price. The government will be able to mop up some more revenue, which it needs at a time when its overall revenues are suffering because of the coronavirus outbreak and the economic lockdown. So therefore, it is possible that the government can use this route to get this revenue from the oil sector without impacting the retail selling prices.
Crude oil prices have shown a downward trend for at least some time now, but there has been no significant change in retail fuel prices in Indian cities. Why so?
Well, as I explained, what happens is that the crude oil prices coming down is not necessarily leading to a fall, equivalent fall in retail prices, because the government steps in and the government wants to bolster its own revenues, which are otherwise falling. So what the government did in March was to increase the excise duty on petrol and diesel, but there was no impact on the retail selling prices. Yes, the consumers would have gained if the full impact of the crude oil price cut had been passed on, but the government, in a larger interest from the public finances point of view, has, I think, correctly mopped up this revenue so that it can be used for other developmental expenditures. And in any case, at this point in time, when the government's finances are under stress, it makes sense to not let the entire benefit of the crude oil price decline to the consumers, and instead use that money for meeting the government's developmental expenditures.
How much revenue do states and center earn from taxes and duties on fuel?
Well, quite a lot actually. About 20% of the central revenues are accounted for by the petroleum sector, and this includes the dividends and various other things. And for the states, it's around 8%. So the petroleum sector is a big segment of the economy, and it plays a big role.
So is there a sweet spot for both the government and the end consumer?
Well, as of now, I don't see a sweet spot. Lower crude oil prices have not come alone. They have come along with an economic slowdown, particularly because of the coronavirus outbreak. It will take a long time before demand comes back. So if the crude oil prices had come without these attendant factors, I would imagine that the consumers would have gained, the economy would have gained, the costs would have come down, so the benefits would have been fully derived. But because the manner and the circumstances under which this crude oil price has come about, I do not see the benefits of falling crude oil price percolate down to the economy or to the consumers.
Thank you for joining us. We'll be back next week with another deep dive with AKB. As India stays locked down, Business Standard is providing free access to its premium content for a month on businessstandard.com. Check the link given in description to claim your free subscription. Do follow us on YouTube, Facebook, Twitter, Instagram and Telegram for more.